friends, this is Martin from Brokerage, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show, where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So the markets were consolidating, right, in the last several days. If you see, right, nothing much is happening. It's a bear trap and a bull trap and again a bear trap. So basically, there's huge resistance for the banks, the banking index, and banks are a major constituent of the markets, right? So let's get into see the details. So as usual, the pre-market analysis would be based on all the parameters that you see on the left side. With additional data analysis will be done on parameters that you see on the right side. We'll have some wraps and actions. So let's see the charts, and what you see here is it's a green candle, right? It's open is equal to open is equal to open is equal to low pattern, right, which is kind of there's bullishness that you can see in the candle as such independently if you see, but remember that it is a gap down and recovery that's basically happened. And Bank Nifty, it's contrary to the Nifty, right? It's red candle. It's more like a inverted hammer, right? Or it could be an indecisive candle as well. So right, if you know, this is little flattened, this chart, but otherwise it's more of an indecisiveness that you can see. It's basically a doji, right? A hammer should more than more appropriate than to say it is a hammer, right? So regardless, it was a gap down that happened, right, and no recovery happened in the Bank Nifty. That's what happened, right? It closed flat Nifty, right, up to the recovery. 23 points only lost, and then it ended up with a green candle, and it's still above the 200 EMA, and the bounce up happened from the famous gap support, that is still valid for the Nifty. And the thing is, it is resisting the same place it was resisting 2 days back, 50 DMA. And overall, you see the price action is a it's trying to break out from a down sliding trend line, and a double top you see in the higher time frames also. You see, right, where we touch the neckline and then try to bounce up. So Bank Nifty lost more, 620, nearly 2%, 1.72% of loss happened, and ended up with a indecisive. It's not actually a hammer. It's more of a gravestone doji. Gravestone doji would have a higher wick size and very small body on the bottom. See, basically any small body would indicate that there is indecisiveness in market, right, whether to go up or down. The thing is, it is facing huge resistance of the window gap as well as the DM. It is below both these two things, but it's good that it did not breach the 20 DMA today. So price is also attempting to break out from a trendline channel downsliding, and also it's a double top M pattern that can be seen on the higher time frame if you look at. So there is some bearishness that is still there in the trend wise, but overall it's a consolidation that's happening. It's evident if you look at this Bollinger Bands, right? Bollinger Bands, you can see that the volatility is due to the width of the distance from the median to the bands, right? That is high, relatively high. That's why we have heavy volatility in the market. So there is no contraction of the volatility that has happened, but the bands are not skewed basically. And the fact that it is above the median shows that there is bias of bullishness still there above the indices. But volatile consolidation, because the contraction is beginning in the lower band, and here the skews is happening, contraction is happening, just started but still wide. So there is volatile consolidation is what is happening. Intraday, this is what happened, right? It gap down here and then attempted to recover. Again, fail, heavy volatile. It's an expiry day, so obviously. Bank Nifty gap down but could not recover as much as what Nifty did. That's exactly what happened in the market, right? So resistance support levels, you can see it is comfortably moving for the 5th day on the same gap support, right? So the support zone is 70,000 to 70,200. So the immediate support would be 17,200 to 7,300, where it is exactly taking the support today. And below that you have the 17,000 support, then 16,900, 16,800, that's on Fibonacci 38 retracement. Below that you have 16,700, 650, then 16,550, 16,500, 650, and then 16,350 to 450, which is Fibonacci 50 retracement, which also has got another gap support that is there. On the upside, resistance immediately would be 7350 to 7400, and then above that 17500 and 7600 Fibonacci 23, which is a major hurdle where it has to clear that for this up move to sustain. Until then, it will be more of a sideways movement that will be happening. Bank Nifty also, actually, it clearly gave away the gap support that was there. It was already breached there for yesterday, but today it clearly closed below that. But day for yesterday, it closed above within the gap itself, right? So that gap is history now. That's invalid. So that support is gone. Now it is looking for the next. It is currently taking the support of 35,000, 35,300. That's Fibonacci 50 support is taken. That is gone. Then 34, 350, 750. That's on it will come. Then it will take support at 34,100, 34,000 level. Fibonacci retracement level, that is also 38. And that's how the supports at the downside. There is also a near the Fibonacci 38 retracement of 34,000. There is also a gap up support. Windows gap support is also there. So very good support downside for both indices. And the Bank Nifty again resistances, if you see on the upside, you have the 35,000 resistance, 35,600 to 35,900. That's near to 36,000 has got the gap resistance is there. And above that, the gap would be cleared by 36, 300, 800. It's not this gap. This gap is gone. It's now invalid. But there is a previous resistance there. That is 36, 300 to 36, 800 from Fibonacci 38 retracement level. The gap is at 36, 900, 37, 100, and 37, 500 Fibonacci 23 retracement. So these are all the resistance on the upside. So there is entire zone. This gap has to clear at 37, 500 as we claimed back. Till then, it is sideways movement that is there. Similarly here, 17,500 has been clearly conquered. That's resistance. Nothing has happened last. I've been saying the same resistance support levels more or less for the last 4-5 days because nothing has changed, right? 4-5 days, nothing has changed. It is just taken a pause. You can clearly see that it has taken a pause, but that pause did not sustain for Bank Nifty. It has slipped down, but it is not given to 20 DMA. So wait and watch. Here it is still strong. It is just taken pause and strongly taking the support of the gap. Momentum still sideways, right? And you can say it is resisting below the bullish zones, RSI 60 levels. And that's the same case in Bank Nifty also. Now sideways is the overall momentum. It is not a bullish. It is resisting before it is climbing to the bullish. It is just taken a pause before deciding whether it is to move to the bullish zone. So sideways momentum remains in the medium term and short term. No divergence is seen as of now. So trend indications, if you see, the bullish trend on the short term is maintained by the Nifty, but Bank Nifty has crossed over back to the various zones, DMA negative on the ADX indicator for the trend. Right. So, but the crossover has, whatever the bearishness or bullishness that you see in the Nifty and Bank Nifty has got weak strength because it is the green line is strong, the strength indicator is moving down, but it is bearish on both the indices on the medium term. So bullishness continue on the short term only for the Nifty. Otherwise, it's all bearishness. Still, the trend has not really changed. You can never say that, right? The bounce up happened. That's it. We are on the edge of getting into the trend reversal place. So that exactly so. So already cooled off a little bit. 3.3% cooled off happened. So 23.9, very close to 24 is what the India VIX is there. Implied volatility of Nifty, you can see 24.1 and 92.3 till at the top level. So volatility is still high. 23 is 24 level is still high. There is fear still there. The war is still happening. So obviously the indicator of the fear and greed is what the VIX is all about, and VIX is telling the exact story. There is indecisiveness, there is uncertainty. Open-interest data analysis may not be valid this much because we are looking for the expiry of the monthly expiry March 31st, and that may not have been actually traded. The real position support resistances, call writings, put writing and all will be clear from the next Monday onwards only, from tomorrow onwards only basically. But still we'll mention that 16,500 and 18,000 is a very wide range, right? 1,500 point range, and 7 were the highest put and call writing support and resistance is seen. 70,000 and 74,000 is the second level of support and resistances. Similarly, the Bank Nifty 34,000 and 37,000 That is 3000 point range is what the put and call rating is seen, where support and resistances are seen, and 35,500 and 36,000 is where the maximum put and the call rating, second level of sub highest put and call rating, support and resistances are seen, right? And put call ratio is 0.96, closer to bullishness for the Nifty, but it is little less, not that bullish enough for the Bank Nifty. 0.65 put call ratio PCR, and is a short build-up on the futures of interest data that is seen. So interest data may not be too much of consideration for a Friday trading. Yeah, so overall, banking did not do well. FMCG and auto also did not do well. IT did well. Pharma did well. Metals did well. That's what primarily that is what happened. Hitmap is Reliance as usual has been doing good. TCS, IT stocks and ITC. Reliance, ITC and TCS is what moved the market today. Metal stocks are also done. Pharma metals are going good, right? So that's the price action. Index aviates, if you see, it's a red close for HDFC. It is resisting momentum, at the entrance into the bullish zones. It got resistance and then fall down. So it is attempting to move and take out the next resistance on the upside, which is marked in the pink block here on the upside. But yeah, so sideways more momentum is what you see in the HDFC twin also is at a major resistance zone and struggling to cross over above that. It's in a trend line channel. The momentum is sideways resisting, and trend is also kind of sideways. Reliance is a star of the week, you can say, right? It has been consistent, has broken out from the channel, and then today also it's a green close. Momentum is bullish zones, good volumes, good price action, no cup and handle breakout. Everything seems to be bullish on the Reliance. Infi is also a close green. I did it well. Momentum is bullish, but you have to keep caution because it's near an all-time high. Whether it will break out and make a big breakout from here, or would it again fall back facing resistance is a possibility. So you have to be cautiously bullish. TC is also a green candle today. Sideways momentum is only it is well within the channel. Long way to go up to the channel top. ICICI Bank is sideways and it's a green close today, but it will have immediate resistance upside, and it is drawing the energy to pick up and move further, but momentum is sideways. Volumes are also slightly less. Kodak Bank bearish close, and seems like it is falling back to the support zone. Momentum is dipping within the sideways momentum. Crossover has not happened to the bullish zone set. So that's it. Reliance is only stock that is worth looking at from the bullishness point of view. TCS, IT, TCS and Infi are also doing good, right? Recovering after the major correction. Right? Banks did not do well at all today. So did the heavyweights in the banks. IT performance, if you see, green close for IT, 1.2% up. It's in the bullish one's momentum. Metal 1.5% bullish and bullish. So both these sectors stocks can be picked up with cautiousness. Auto 0.4% down, momentum sideways. Pharma was up 1.1% bullish as in the bullish zones. Pharma also can be considered, but remember that medium term is still sideways, so you have to put right stop loss and be cautious if you're going long. Pharma Metal ID has turned short term bullish. Auto, FMCG and Realty is kind of the closest were also flat, and it is sideways momentum only, so just have to wait. Interest population data has not come in as of yesterday. Last 2 days FIs were small buyers and DAs were small sellers, unlike historically how they have been doing for the last several months. Today, what is the trend? The data is still not available. We'll just refresh and see whether the data has come in or not. Yes, today's data has come. So the FIs are doing their job once again of going back to the big selling. 1,740 crores of selling happened in the cash today. But DA is compensated for that with 2,100 crores of buying. That's how the Nifty recovered back today. So that is the FIDA data. So DA is basically FI selling continues as before, right? After this small pause, it continue to sell. Now, USD and currency pair has had a rupee basically little strength was gained today. Means regain some strength, you can say. And it is resisting the momentum, and overall it's an all-time high, very close that 76 plus level. So If it is a red close, probably it may be some intervention of the RBI that might have happened, because US currency index is shooting up and then got into the bullish zones back, and then looks like it is heading to a 99.6 immediate resistance on the upside. So there is a threat to the rupee, because rupee has weakened to an all-time high level. Global indices, it was a red close for Dow yesterday, and you can clearly see that the momentum is resisting at the RSI 60. That means there is major resistance at this place before before it can go further up, right? So, but still, it has sufficient distance away from the bounce up area. So hopefully it will recover and gain the strength and move back to the bullish zones. You never know. But overall, that's what it says. The resistance at the edge of the bullish zones is what you can clearly see. The momentum resisting in all the major indices, S&P 500, Nasdaq, and Dow, all of them showing that there is some resistance for it to further move up. The momentum is kind of stuck, indecisive, or facing selling pressure, right? That's what US markets. But as compared to a few weeks before situation, it's far better. Crude is the danger. After a 27 point percentage of dip that happened, cool off, is back to going back to 13-year high once again. Moment is also the bullish. So that's not good for us at all. Vauld seems to be gained sufficient energy to climb back, and it is a green up move that you can see. Right? Remember that it had broken out and then took on to the took on the selling pressure from the top very close to the all-time high, and then fallen back to support zone and consolidated for a few days, and now today is a green. But the momentum is sideways still, so you don't have to worry about an immediate surge. To actionables, comments India. It seems to be well within a channel. Price action seems to have taken out a major all-time high resistance zone, and now in the volume is above average, and momentum is bullish, and trend is also rising and bullish. ITC has been the star since our last several days. There's still more space till the 267 kind of level where we have immediate resistance, and then 307 or something. So there's a long way to go. It could give some upside. Momentum is shooting up and rising, big volumes. Trend is super bullish, so it may have still juice left for swing trades for the coming days. ITC and Commons India. Wrap up is the same as yesterday, neutral to mild bearishness, and that is based on my view formed out of the chart pattern study, out of support resistance that we have seen, the sideways momentum, the trend indicators that we have seen, the Bollinger Bands, sideways contraction, all of this combined, I came with this view. You can frame your own view. Market has shown that there is 10% recovery. It's all the repetition of what I had put yesterday. So 12 days it had done good recovery. Now it is taking a pause and consolidating before it is jumping into the bullish. So that's what is happening. Now how long this consolidation may happen, right? So the thing is, the banks are having a gap and 200 DMA to close. Heavy resistance in that zone. It's a confluence of multiple moving averages, 150, 200. All of this has come in as resistance. So it may take some time for the index to find sufficient energy, and there is uncertainty in the market, and war talks are there. Volatility obviously is about 24, near to 24 kind of levels. FIs are continuously buying, and hardly any, continuously selling, and hardly any buying. Even if they are buying at 200, 300 crore, right, and selling it 3,000, 3,000, 4,000, that level. So positive factors are very less. Right? The good recovery that happens is the strongest positive factor, and not crashing and holding on in spite of this crude heavy rise and US dollar inflation, all that. Still our markets are showing strength. Is evident from the retailers' confidence in the market. So stay away from the market and trading derivative instruments and all that at this point in time. Protect your investments by having hedging strategies, like using options of gold or other ways. Using option strategies, you can so cash secured puts and covered calls and all that can be used to hedge your positions and then make money while the correction is happening. So you can also pick up quality stocks in the savvy mode. And if at all you have to trade the options, then use calendar spreads and hedge strategies whenever there is a overnight portion, because you never know what is the next day, what event or what news may be toppling the market against your view. So Always have risk defined strategies, whether it's spreads or non-directional strategies or any of the other strategies, but risk has to be defined before you take the positions. And intraday, the volatility is that today also we had very highly volatile within a range, 600 points. It was moving up and down just like that. So intraday, if you told you have to trade, have tight stop losses so that you know what you're losing and don't wipe out your capital, right? So overall, it's a neutral, mild bearish view that I have for the next day. I hope this helps you to frame your view and your trade plan for the next day. If you like it, consider hitting the like button and then share it to your friends. We have few subscriptions only, and appreciate your help in this regard. Share it to maximum number of people, right? It will help us keep motivated to keep doing this for every day, right? Thanks a lot. Thanks for watching. Happy trading and happy learning. Bye.